All right, good morning, Lagos. Good morning, everyone. This is Follow the Money brought to you by Nairametrics. My name is Ugo Dre, and we do this every Monday, 8 to 8:30 on this channel. Follow the Money is a capital markets show where we focus on mostly on equities, and once in a while we touch on fixed income and security. As usual, this program reflects my view, not that of Nairametrics or anyone else. It is purely for educational purposes and not an investment advice. We don't give investment advice on this show. But if you need, any advice or anything at all, decision on which stocks to buy, always do your own research. Very important that you do that and consult a financial advisor if you have one. And if you don't, you can always find them online. Now that we have that out of the way, we go to follow the money for this week. A whole lot of stuff happened during the week, and we start first with the all share index itself. All share index, of course, closed the month of February 4.76 percent year to date return, that is, compared to 1.53% year to date return in 2025, in January 2025. Of course, that is a bit of a downer when you see, when you check that. Last year, we were at 32.3% year to date return as of February 2024. Of course, that was because of the massive depreciation that happened in 2023, and so a lot of investors had to basically reprice stocks because they suddenly just look very, very cheap, and so we saw that surge in share prices. But of course, 2025 is a much different scenario. I think a lot of the prices we see now reflect a bit of reality or aligns with the current state of the economy. Anyway, the all share index was up 3.18% during the week, closing at 107,821.39 points, largely driven by the mega stock Dangote Cement. Yeah, Dangote Cement is a mega stock, and we're going to be talking about their results later on the show. Dangote Cement was up 20% during the week, and that basically just drove the market. Dangote Cement is one of the suits that stocks worth over 1 trillion naira, and the largest, the most capitalized stock on the Nigerian exchange. Stock market was also driven a little bit by some mid cap stocks. That's like mid-sized stocks that are not so large, but they all did pretty well during the week. So market capitalization is now 67.1 trillion, up 3.7%, despite a little bit of a drop in trading volume. Was that really a little bit of a drop? 27%. That's not a little drop, but that's a huge drop in trading volume. We've been seeing trading volumes drop over the last few weeks, though. So it looks like investors appear to be recycling money out of the equities market and perhaps going into other market. But a bit of a surprise here, because we're seeing fixed income security yields drop. Like Treasury bills is now like maybe like sub 20%, own bills as well, which is usually where institutional investors and mostly banks tend to buy, also drop. The only area where we see interest rates still a little sticky is with commercial papers. Commercial papers are going for we've seen some go for like 29%. So perhaps maybe that is what the likes of pension funds and other local institutional investors are buying, because just don't understand why we're seeing volumes dip, or perhaps they're waiting to digest some of the results that they've seen. Because we're obviously in an earnings season and there are a lot of results that have been up. Anyway, industrial goods index was up 10% during the week, of course, driven by Dangote Cement and Better Glass. I talked about Better Glass at some point in the show a few weeks ago. Consumer goods also up 1.7%. Oil and gas index down 4%. Banking index also down 2%. Insurance index down 0.87%. Now, someone told me that perhaps maybe why banks are probably falling, or bank stocks seem to be like correcting, perhaps because a lot of investors think that the super profits we saw banks make last year, they might not repeat it this year. So maybe that's why portfolio managers are repricing banking stocks. I kind of disagree with that notion because a lot of banks are still relatively very cheap. See, a lot of banks trading at less than two times their earnings. I always say here, the closer that number is to one, the cheaper the stock. Because when a stock is trading at one times its earnings, it means you're buying it for one times, for the price of its profit. So just think about it. Imagine that you have a business and that business just made, 1 million naira this year, right? And then somebody wants to buy that business. Are you going to sell that business for 1 million naira? Obviously, I'm going to sell it for 1 million naira. You're going to sell it for like 10 million or 20 million because you know that anybody who buys that business would always make 1 million naira or more in the future. Okay, so that is why people tend to price stocks in multiples of the earnings. So imagine that bank stocks are trading at two times their earnings, some max three times their earnings. And so investors are basically saying those bank stocks are worth just three times their current year profit. That is just too cheap, Anyway, but that's what it is. I've always said that there's always a huge difference between price and value. Of course, price is what people want to pay for things. Value is just what it's worth to whoever it is that's looking at it, or the intrinsic value of that stock. Of course, there were gainers and losers during the week. We're going to look at some of the top losers. Starting with the top losers, Triple G and Co down 12.3% to close at 2 naira 2 kobo. Guinea Insurance down 12.3% to close at 64 kobo. Is this stock in your portfolio? Is it in your portfolio? Are you sure? Owando also down 15%, currently trading at 58 naira. That's one very seesaw stock over the last few weeks. Prestige Insurance, another insurance company, down 15.38% to close at 1 naira 10 kobo. Golden Guinea Breweries down 17.9% to close at 7 naira 9 kobo. Dar Communication also down 17.94%. Appears that some of the gains that he had during when they announced that looks like they were having a deal appears to be fizzling out. University Press down 18.75% to close at 455 kobo. Unicell, Interlink also down 27%. If you notice, a lot of the stocks that are down are stocks that posted relative gains earlier in the year and towards the end of last year. Appears the market are basically just tired of the stocks already and basically dumping them. That's why I always say you have to be very careful when you're buying some of these penny stocks, because penny stocks most times don't necessarily reflect their real value. So at some point, the price will always come back to its value or to its position, or perhaps even lower than the value. Len Africa, another penny stock, down 28% to 3 naira 3 kobo. And then Union Daikon Salt, the biggest loser of the week, down 28% to 5 naira 4 kobo. I'm looking across all these top losers, pretty sure that I don't know how many people are going to probably own some of these stocks here, like Dark Communications, Triple G, Guinea Insurance, Unicell. I don't know how many people own these stocks, but kind of looks like it's not some of those very familiar stocks that you see in people's portfolio, except maybe perhaps Owando. A few people own Owando stock. So for those who have Owando in their portfolio, Owando was down 15.13% during the week. Of course, we've got top gainers. Top gainers include stocks that gained. And guess what? The lowest stock, remember I told you Dangote Cement gained 20% last week alone. But the lowest gainer gained a whopping 32% last week. So investors made a killing during the week, especially investors who own the stocks I'm about to read out. So are any of these stocks in your portfolio? If there are, then you've made some money last week. Red Star Express up 32%. Africa Prudential up 32%. This stock is not just letting up. Africa Prudential has been on a tear all year round, so far this year, up 32% again in 1 week. So it's now trading at 5 naira 40 kobo. Presco, one of my favorite stocks. I've reviewed Presco on this show before. Presco up 34% to 785 naira per share. Caverton Offshore up 37%. It was a big news for Caverton during the week. I'm going to talk about it pretty soon. Perhaps that is why investors are rewarding it. Appeared maybe they love what they heard, and it's up 37%, 295 kobo. Better Glass, one of my faves as well, about hitting that 100 naira mark, up 39.65%. I'd mentioned Better Glass was on my watch list. So if you had bought Better Glass, perhaps you will be smiling right now because it's up 39% in just 1 week. Livestock also up 40% in 1 week. This was one stock that has been one of the better gainers or the most performing stock this year so far. Honeywell also gained 43%, also been doing pretty well now at 13 naira 70 kobo. Eternal Oil up 52%. To close at 42 naira. UPDC up 53% to close at 2 naira 87 kobo. And of course, PZ Cousins riding on the back of news that some of his that was going to convert some of his intercompany loans or shareholder loans, I beg your pardon, into equity, up 53.91%. So a lot of massive gainers there for investors. So if these stocks are in your portfolio, you've made some good money last week. Huge money last week. So of course, there were other news as well during the week. Presco, Fitson, VFD, all of them all released their numbers. Of course, Dangote Cement also announced a $400 million Ethiopia cement expansion plans as well, while Transcorp also published results. I'm going to be talking about Transcorp at some point. Who knows? Maybe this month we're going to see the all-share index hit the 110K mark in March. It was just a few months ago I was talking about when are we going to hit that 100K mark and stay there. But looks like we've blown past that 100K mark now. We're now knocking on the doors of 110,000 points, all share index points. All right, so we quickly go now to Caverton. Caverton was in the news last week, and they announced a joint venture with NNPC and Stenabog. So what was that joint venture about? So Caverton Offshore Support Group, that's the holding company that owns Caverton Helicopters. I'm sure you all know Caverton Helicopters. They said they partner with NNPC Shipping and Stenabog to enhance maritime transport in Nigeria. So they have a new tanker operation that will focus on crude oil, refined products, and LNG shipping in Nigeria and West Africa. The plan also includes acquiring vessels and securing long-term charter agreements to ensure efficiency and competitive cost. The partnership, according to both of them, this is not my words, this is what they're saying, also aims to modernize the Nigerian maritime sector, offering services beyond NNPC to other oil producers and traders. Who are these traders that want to offer these services to beyond NNPC? Because NNPC is like the biggest, local trader of them. Of course, you have other ones. You have, other oil marketing traders in Nigeria, and other oil producers. But, they're claiming this is not just for NNPC alone, but for other traders as well. So big deal here. Also remember that last August, Caverton also announced a partnership with Explomar to integrate electric outbound engines into his omnibus passenger ferry. So a lot of stuff happening in Caverton, and I think investors kind of like what they saw. Of course, one thing you probably want to watch out for is what does this mean for the company's revenue, impact on its revenue growth, fleet expansion, and long-term profitability. Those are the three key things we're going to be looking out for, and no surprises that investors rewarded Caverton with a massive 37.2% bump in its share price. So if you are somebody who believed in Caverton Helicopters or have Caverton Offshore, beg your pardon, or have their shares in your portfolio, you should be smiling. I don't have it in my portfolio. I never had Caverton in my portfolio, but looks like the company is making some good moves, and investors kind of like what they're seeing. And perhaps that is why the share price is going up. So we're going to take a short break, and when I'm back, we're going to be looking at a lot of results. BUA Cement was out. The cement big boys, their numbers were out last week, so I'm going to be looking at them. We'll look at BUA, Dangote Cement, and Lafarge. If time permits, we'll also touch on MTN. The mega telco releases results as well. Some improvement there, from their numbers. At least we see silver line. I'm going to talk about Nestle as well, Mecure, and NGX and Transcorp Hotel. You see a whole lot of stocks out there if time permits. But be right back in a few seconds. Don't go anywhere. All right, welcome back to Follow the Money, brought to you by Nairametrics. We do this every Monday, 8 to 8:30. You can catch the version of this show on our YouTube channel, Nairametrics. You can catch several other shows, of course, on our YouTube channel. Our flagship Drinks and Mike's show, episode 9, I think, is currently up. You can go watch it. A lot of stuff we talked about with the drinkers as well. It was amazing, another amazing episode. Just go to Nairametrics TV on YouTube, and of course follow or subscribe, as they call it on YouTube. Subscribe and click on that link so that you can always get alerts whenever we have new videos up. This particular Follow the Money show would be on our channel later today. You can watch me live in the studio as I'm doing, well, not live, but at least you can watch me as I do this. And then who knows, I might follow up with another hot stock edition later this week. I'm going to be reading out some of the stocks that I have on my radar, on my watch list. All right, so we go back right into the results that we saw during the week. There's so many of them. I just hope that time will permit me to go through them. The first one, of course, is BUA Cement. The cement big boys all released their numbers during the week. BUA Cement reported a massive 48% surge in its pre-tax profit to 99.6 billion, driven mostly by strong domestic cement sales. Revenue also surged 91% to 876.4 billion naira. So you see, despite all the inflation issues and all the problems we have last year, a lot of companies, like I've always said, recorded massive revenue increases. And BUA Cement just showed, this is cement, they're up 91%. But just as revenue prices were up, cost of sales also jumped 109%. So cost of sales, as the cost of raw materials, input, and all the other direct input costs actually was higher than revenue growth. So it wasn't also easy for them because they also experienced surging cost, 1.09%. However, they were able to still manage operating cost, and that's why they got operating profit jump of 93% to 144.3 billion naira. The company was also hit by forex losses, over 92 billion from what we saw in the results. And then total assets for BUA Cement is now 1.57 trillion. We did also notice a bit of a dip in its cash reserves, but profit after tax was up just 6%, largely due to tax reasons. But strong numbers, strong revenue growth for this company for the month, for the year 2024. However, they still had to contend with rising cost and forex losses. Nevertheless, share price stood flat at 93 naira per share. BUA Cement is currently trading at, guess what, 78 times its earnings. Ooh, that's a pretty expensive stock out here, 78 times its earnings. Now, juxtapose that with the bank stock that is trading at 2 times its earnings. You see what I mean? Bank stocks are pretty cheap. And of course, you go to Dangote Cement, the largest cement company in Nigeria, by the way, and the largest stock in Nigeria by market capitalization. Revenue was up 62% year on year, lower than that of BUA, by the way, but up 62% year on year to, guess how much? 3.58 trillion naira. That's basically almost $3 billion in revenue, driven mostly by price hikes, FX, of course, effect, because Dangote Cement operates outside Nigeria, so as well. So they do have a lot of earnings coming from outside Nigeria. And of course, we also learned that demand was also pretty up for the company, despite all the issues we all faced last year. So that sort of helped them. Nigeria, of course, led its growth. Nigeria contributed 64% of the group revenue at 2 trillion naira. So, and it's pretty good because before, Nigeria used to contribute as much as 80, at some point 90% of Dangote's revenues. But you can see the benefit in Pan-African expansion. So now they are seeing other markets contribute to their top line revenue growth, even though Nigeria still leads with 64%. But Pan-African expansion just shows how much strength that brings when it comes to diversification for the company. Production was slightly flat from what we saw. Prices thus essentially drove growth for the company. Sales revenue gains weren't necessarily volume driven from what we hear, because I think volume growth was probably just flat at 1.57%. They did experience a lot of cost pressures, higher fuel and raw material cost, push cost of sales. But 54% gross margin was what the company still managed to eke out. So despite the higher cost of sales, they were still able to, have solid gross margins in there. Operating margins, however, dropped 32% as expenses rose for the company. Debt and finance cost still up. Debt is currently like up 286%, while finance costs gulped a whopping 700 billion for the company. So stable leverage, despite that, lower efficiency, a little bit needs to, just need to be a little bit more efficient, which I expect them to deliver later at some point this year as a lot of these cost pressures start to dissipate. Return on equity for Dangote Cement was 23%. Still solid, even though it's lower than inflation, but pretty much solid for the company. It's always had a very high return on equity despite all the cost pressures. They were still able to give us 23% ROE. Dividend at 13 naira. Return earnings is still strong. For still pretty strong, which means they can always still pay dividend. Dangote Cement always pays dividend year in, year out. Of course, what should investors be watching out for? You want to watch out for rising debt. You want to watch out for cost control and how they're able to manage efficiency this year. Dangote Cement trading at 418 naira per share at 16 times its earnings. So as you can see, at some point, this was a stock that hit 700 naira sometime last year. So could this be maybe a buying opportunity out there? It looks like one stock I might be looking at putting in my watch list. I'm going to go on Lafarge. Lafarge also releases numbers. Pre-tax profit up 93% year on year to 152 billion. Driven mostly by revenue growth. Revenue up 72% to 696 or 696.7 billion naira. As you can see, all the cement companies doing pretty well, last year, revenue up all through, but they all faced the same issue: cost pressures. Cost of sale was up 76% to 350 billion naira, driven mostly by fuel and raw material expenses. Finance cost was also up 64% to 25 billion, while finance income dropped by about half of what it did a year before. Lafarge total assets currently 990 billion, smaller than BUA Cement. Just kind of shows you how much local cement companies have basically done. I mean, Lafarge used to be like the largest cement company in Nigeria before, but Dangote and BUA Cement essentially has overtaken them. But who knows? Lafarge was recently acquired by the Chinese, and who knows what they're going to do. Maybe we're going to see a turnaround there. And this stock has enjoyed some capital appreciation of late, and so maybe this is one to watch. Dividend one naira 2 kobo per share. And then we did hear from the CEO. The CEO said he was optimistic, even though he cited resilience in demand and the company's operations. He also mentioned that they had a lot of innovation just so that they can get profit out, and then sustainability was a major key driver for them. What am I going to watch, or what I'll be watching? So investor watch for me here is rising costs. I want to check rising costs versus strong profitability and market positioning. What is Lafarge trading at? Lafarge is trading at 75 naira per share, and currently its price to earnings ratio, or its earnings multiple, is at 12 times. So its price is at 12 times to earnings. So let's not compare it. So Lafarge is trading at 12 times, Dangote Cement at 16 times, and BUA Cement at 78 times. So where should we now be? So if Lafarge was to trade at the same multiple or at BUA Cement, that stock is going to be like 200 or something naira per share, even though it's currently at 75 naira per share. So it's either BUA Cement comes down or the rest go up. So that's something that we're probably going to look at. That's why this cement industry is going to be very interesting this year to see how it pans out. We'll move on quickly. MTN also released their numbers during the week. Revenue was up 35.9% to 3.3 trillion. Despite all the complaints about not being able to increase tariffs, their revenue still shot up to 3.3 trillion. So who knows, by the time this tariff increase goes on stream in 2025, these revenue numbers are probably going to be much higher than this. But despite the revenue numbers going up, they still recorded major losses. Revenue record losses that they recorded during the year was 400 billion. in losses during the year. Forex was a major contributor to that, and Forex losses surged 25% to 925.36 billion. So you see, despite the revenue increases, they still incurred significant FX losses. Of course, operating cost also went up for the company. So that is probably why they do need some of these tariff adjustments so that they can be able to absorb some of the cost increases and cost pressures that they have, that they're experiencing. Without forex losses, we did some computation at Nairametrics. Without forex losses, MTN probably would have made a profit about 240 something billion or so, 247 billion. So you can see what forex losses is done to them. Despite all these issues, they still spent a whopping 443 billion naira on capex last year. A massive investment there. So that is it. MTN currently trading at 264 naira per share. No price to earnings ratio because they had a loss last year and 2 years ago. FX volatility, cost control, and impact of tariff adjustments are some of the things that we're going to be looking out for in 2025. Nestle also released numbers. Loss before tax also hit 221 billion. So losses widened by over 113% year on year. We all know why. FX issues. Revenue was up 75% to 958 billion naira. But cost of sales rose more than revenue, 98%, essentially outpacing revenue growth and pressured margins significantly. Finance cost was also up 392 billion because of FX, right? FX losses essentially, catapulted the finance costs that they had. But there was one major silver lining for Nestle, though. We did see the first quarterly profit in a while for Nestle. They eked out 19.7 billion in quarterly profit in Q4. So perhaps maybe we're beginning to see a turnaround. Looks like they're getting things right in Nestle after all the issues. Nestle share price currently at 975 naira per share. So that's one to watch. It's been on my watch list for a bit, though. It's just that the share price hasn't come down enough for me to get in. I think I want that share price to come down a little bit. I mean, I'm sure some investors won't agree with me on this. Who knows what's going to happen? Stocks, the share price has been rebounding. I think it's gained about 11 or so percent, if I'm not mistaken, this year. Mecure also releases numbers. Mecure's pre-tax profit was down 10.49% to 3.3 billion. Largely due to surging finance costs. Revenue was up 44.9% to 46 billion, driven by acute medicines. They call it acute medicine division. That sort of contributed 44% also to the growth, and it makes up 54% of its sales. But Mecure has a total debt of about 31 billion, which is up 60%. Cash reserves also dropped for that company. Key takeaways for me from Mecure: sales growth, profitability hit by rising costs, and debt burden. Time is not on our side, but quickly go to NGX. NGX pre-tax profit up 158% to 13.58 billion during the year. Gross earnings doubled to 23.9 billion. Of course, NGX are the owners of Nigerian Stock Exchange, so they did pretty well last year. Maybe we'll touch on them a little bit more next week. And then Transcorp also released their numbers. Pre-tax profit soared 138% to 22.6 billion. Guess what drove that? Room sales and FX gains. So revenue was up 69% to 70.1 billion. I tried to do everything, but I did try. But that has been Follow the Money this week, brought to you by Nairametrics. Of course, you can always catch this version of this show on our YouTube channel, Nairametrics TV. I hope you guys are watching out for our Capital Markets Award, Nairametrics Capital Market Choice Award, which is going to be coming up in April. You want to see which companies are winning the awards. This is a good Ray. Until I see you again next week, do have a profitable week ahead. Goodbye.